talking about oil, it's come off from its 2019 highs, but is still trading at those heady levels, $72 plus at what it had gone to. Vandana Hari, the founder at Vandana Insights, is joining us on the show right now. Vandana, good morning to you. Few points. First, the China first quarter GDP rising 6.4%, March throughput at about 3.2%. US crude stockpiles falling by 1.4 million barrels last week against the expectation of a rise. All of that in its own way weighing up on oil prices. What is expected from here?
Very good morning to you and your viewers. So, yes, we have seen a little bit of pullback in crude prices overnight because, as you mentioned, the crude inventories dipped, but not as much as had been expected based on the API figures a day ago. If you look at the overall sentiment in the oil market, it still is continuing to track very closely what's happening with regards to the US-China trade deal, of course, and we continue to see positive momentum in that direction. So we still don't know when a trade deal might be signed, but obviously the markets are very optimistic. And you see that reflected broadly in the financial markets. So the stock markets have been doing well, and crude has been supported by that as well. As you quite rightly mentioned, some of the Chinese macroeconomic data yesterday came out very positive. Some of it was surprisingly positive, better than what analysts had expected. Though some economists that I speak with also say they are a bit skeptical, the Chinese data, just people take it with a pinch of salt. So we have to see yet. At the same time, China is coming out with a lot of stimulus measures, even though the trade deal is expected. So that makes you wonder, is that the Chinese government is still clearly nervous about its economic growth. The other story, of course, is on the supply side. But there, yes, supply has been tightening remarkably, deliberately from OPEC, as well as unavoidable from Iran, Venezuela, and to some extent Libya fears. However, on that count, I'm not extremely bullish. I think there will be a bit of moderation that will happen within OPEC, non-OPEC, as we go into the second half of the year.
So tightening supply, but let's look at the demand side of the equation. Do you think because of the positive economic data that's come out from China, the demand side of the equation has got a substantial fillip?
I'm sorry, the audio is not very good. I'm going to have to guess a little bit what the question you were asking. Are you asking about Reliance and Aramco deal?
No, I was asking about the demand side. You spoke about OPEC supplies. I was asking you about the positive data from China. Does it indicate that the demand side could likely get a substantial fillip?
So when we're talking about supplies, OPEC has been cutting more than it had pledged to cut. And at the forefront of this has been Saudi Arabia. Of course, it has been producing almost 500,000 barrels per day less than what it was supposed to produce under its new quota. However, we do see within a new sort of dynamics coming up within the OPEC, non-OPEC framework, because Russia has been quite a moderating influence. They have been saying repeatedly that we need to be cautious on what we decide for the second half of this year. And, the Russian oil minister and the Saudi oil minister, I do believe they'll work very closely. They will come to a compromise. The Saudis have been more hawkish, we have seen, not just since the start of this year, but also with regard to second half of the year, saying that most likely we should continue the cuts. But there's this sort of balancing within OPEC, a balancing mechanism going on, which I think leads me to believe that at least OPEC will, even if they agree to extend their cuts, they will not overreach. They will not cut more than is required. And I think the Saudi Arabia here will have to play a very critical role.
All right, Vandana, since you mentioned it, and that'll be my last question to you, your take on the news reports that are suggesting that Saudi Aramco is interested in a 25% stake in the refining and petchem business of Reliance.
Yes, I think It's a very interesting news. I think it would be a great purchase for Aramco. Aramco, of course, has been so much in the news of late. They raised a very successful $12 billion in their maiden international bond issue. So they have money. Of course, they owe money as well because of the SABIC purchase, of course. Huge purchase for them, $70 billion that they need to pay for that company, though that's been staggered. So they probably have some relief in that. I think the interesting thing is what we have noticed with the Aramco bond is that Aramco was able to raise money in the international markets with its bond at a lower yield. So they are paying less interest rate than what the Saudi government pays. So clearly, Aramco has a good credit profile. It's liked by investors. So I suppose it could continue borrowing money to pay for Reliance purchase. Just this week we heard it closed a deal for a 17% stake in the South Korean refiner, Hyundai Oil Bank as well. That's the second Aramco equity in a South Korean refiner. So, that company is, the Saudi company is being very aggressive. It is trying to establish itself. First of all, it doesn't want to be seen as just an upstream company that just produces crude and sells it. It is increasingly trying to take stakes in downstream and capture downstream margins. So not just refining, but petrochemicals as well. In that sense, I think that's why I said Reliance makes great sense, because Reliance got a fantastic footprint in petrochemicals as well, which is exactly what Aramco is targeting. Look, I'm not an expert on all the Reliance businesses, but I understand Reliance could use that money as well to pay for the debt it has incurred as a result of the GEO.